Hi guys. Hi guys. One of my first few YouTube videos. I want to try uploading consistently and actually get into this whole YouTube breaking down trades, breaking down the system, the theory, the logic, the context behind everything, the way I see the markets. I don't take too many trades during the month as it is. This is my third trade of the year, only because the first month of the year I usually like to just let price action develop. Usually up until NFP I'm not trading, so the first 2 weeks of January I wasn't trading. The last 2 weeks I was just letting the market just play out and see what it has to offer. Going to February I took 2 losses. It is February right now, sorry. I took 2 losses and then this is my winning trade, and yeah, I think it's starting to make sense now. The market delivery and the market read is starting to make a lot more sense now. So from there, it's going to get a lot more aggressive with the trading. And again, don't get me wrong, there was a lot of trades within here, a lot of trades. The reason why I didn't take any trades was because I started the year off on a loss, right? 2% loss. There's plenty of trades. I'll show previous backtesting sessions, previous trading sessions, live trading sessions. I record all my live trading sessions. So just to show you guys, it's not a hindsight trading. It's a consistent approach that I've been using for the last, I've been trading for the last 5 years. Or 6 years. In the last 2 years I've proper honed into the higher time frame, building context. And a lot of people think they're building context, but they don't realize it's not just context, it's more building the comfortability with drawdown, building the comfortability with certain price deliveries. It may happen 5 times out of 10, but some of them deliveries you just don't want to get involved in, because that that idea is a little low risk. When you're in drawdown, it's not worth getting involved. And that's the kind of cycle I've been through over the last month, where I've been in drawdown, and the last thing I want to do is take lower risk trades. Now that I'm back to break even for the year, I can deploy all my different models, low risk, high risk, within my certain threshold that I'm allowed to go down before I just stick to very high risk setups. Anyways, I'll break down this trade. Obviously it's all screen recorded, so I'll just put on the screen recorder right after this. Before we go into the actual breakdown, obviously there's going to be loads of unanswered questions, loads of questions in itself as to why I'm trading at a certain time. So my system is solely based on trading a specific session hour. Reason being, I'll go into in another video, but I'll show you examples from early this year, late last year, plenty of examples from late last year, plenty of examples from early last year, to show that it's not hindsight, but it's a consistent approach that I'm using, right? And again, a lot of people can argue against it. My argument for it is, again, I came from trading the 1 minute time frame. Trading the 50-minute time frame, trying to transition into the high time frame. It's like, okay, I'm trading the high time frame now. Where do I enter from? Knowing that, with EURUSD, I've traded EURUSD for the last 5 years. The thing I'm consistently seeing, again, you do have learning session moves, and there's a specific system that I have for learning session. I don't tend to trade learning session solely based on my personality and I just don't like trading in the mornings. Something that could change, should change, but as of right now I'm quite comfortable trading in just the afternoon, especially just trading that one pair as well. But yeah, so my system is solely based on session timing. What session timing allows me to do is get potentially the best entry possible, and it'll be shown in a lot of my examples that I'll be going through. But again, all within context. So it's not every session that I'm trading like I'm going to mention, or like I've already mentioned. Sorry, I've only taken 3 trades this year, and it's coming into the 3rd month of the year. It allows me to get the best or better entries. Not that I'm after sniper entries. Like, look, this could be an entry, something like this. It's not the best entry, but then what it would allow me to also do is get better stop loss placement, a safer stop loss placement, allow me to deploy my default stop loss placement, which is something that I really focus on. You'll never see my trades being taken with less than a 15 pip stop loss. Currently it's at a 30 pip stop loss, so it's either 15 or 30. So there's plenty of examples where my trades will run, I'll use a 15 pip stop loss, but within context. And there's certain trades that I'll use only a 30 pip stop loss within context. So that's my non-negotiable. Another non-negotiable is session timing. I will never sway away from my session timing, not by a minute. I trade from 1:30 New York session to 3 p.m. 90-minute window, no if buts maybes, never after, never before. Something else would be, so you got my session timing, stop loss, TP would be a default 2% TP unless it has swing potential and I'm comfortable to take a swing trade. I would never take a swing trade when I'm in deep drawdown. When I'm in deep drawdown, I'm just trying to get, slow incremental 2%, 2%, 2%, grow myself back up to the 8% mark, the 9% mark, and then I'll start to swing my trades as long as though it has that swing potential, of course. So I'm taking a minimum of 2%. If it's a swing trade, I'm taking around 5, 6, 7, 8%. Very rarely happens, especially with EURUSD. If you're looking at it in the last couple of months, if you're looking at it in the last 2 months, it's not really moved too much unless I deployed my 15 pip stop loss. Again, that comes within context. Another thing for myself is a lot of people argue against it, but I believe, based on my personality, based on my system, based on the stress testing I've done on my system, a lot of people focus on, of course this is a numbers game, you focus on the numbers, and again, in certain conditions, in certain times, I can agree with you saying that it's a numbers game. Take every trade as it comes, for as long as it fits your system, regardless of how uncomfortable you feel. Get over the uncomfortability or the uncomfortable feeling, 100%. At the same time, I also do agree that there's a level of comfortability you want when you're taking a trade. The last thing I want is wake up in the morning, get on with my day, but I know that I'm in a trade where I'm not too comfortable with, where I've deployed my 1% risk, where it's not kind of needed. I have graded setups from a high risk setup to a low risk setup. I tend to just stick to low risk setups when I'm in drawdown. The drawdown I'm looking at is when I've passed my -3 to -4% threshold. I'm only taking low risk setups. Anything above that, I'm taking high risk, low risk, only because I can afford to do so. I don't have a lot of pressure. But yeah, if there's anything else I need to add, I'll add it in later in the video. If there's any questions, I'll make a complete separate video on it, and I'll give you so many trade examples, just as time goes on. But yeah, I think I'll get into the breakdown in a quick second. And you see price coming back again. The idea was to see this get taken out. For what reason? Because we are seeing, let me just clear this, we are seeing price react out of this demand point, even though we're extremely bearish and we've seen fractal breaks of structure. Obviously the idea being, when price breaks structure, the first thing we're trying to do is justify why price can regain control back in its opposing or initial direction. Idea being, structure breaks happen or occur when a larger time frame pullback is in play. So we know this to be a price digging into more of a premium or deeper premium or discount if you're playing the buy side, right? Pricing, whereby new participants entering at better pricing, this becomes valid to take short because it's at much better pricing. That's the whole idea behind a pullback. That's the whole theory behind a pullback, right? The idea is sell this market to these lows. Now, if that fails, we assume this to be a complex pullback. Buyers are being rewarded short term. We're targeting these highs. So the idea is to just see this high getting taken, and then if we can test out the short once again. Now, what's the likelihood of price holding this high? It's just a random high, isn't it? It's just, I don't assume this or don't expect this to get held. But if in the case we see something like, look, A to B range, let's just say this was a valid reaction, pullback, price is to drop, and the idea was to see this drop, just like the idea was to see this drop. But then this gets taken out. We assume this to be complex pullback relative to this bearish range. Buyers are being rewarded. Eventually, once we see bearish flow, once we see price start to slow down, then we can short this market. So at the next size above here, session open, look to short. But again, because intent is bullish and the price pulls back following a large time from intention, you couldn't really get involved in sell positions, right? So it's the same thing we're looking at here, that there's a potential that price was supposed to short after taking out the structure within a larger time from prevailing bearish trend. And if that's failing, buyers have been rewarded, price should take this point out. On a more fractal note, the same thing could be happening within this range, right? Within this range. Pullback continuation, but now buyers are looking to be rewarded. Complex pullback. Is price going to protect this region and then drop, right? So then if we look at this on like the daily time frame, so the weekly time frame looks quite unclear. If you're looking at the weekly time frame, look at this week's weekly candle. Very small. There's literally not been enough movement on this weekly candle. So that's suggesting to me that we're going to see some sort of expansion. Now, we've tried testing out the high points. What we've done, bearish range that we just spoke about, we've taken out fractal structure. Could we have seen a reaction? Price came up once again, so buyers are being rewarded short term. Complex pullback. We've swept above last two previous weeks highs, and we see a reaction, and the candle is quite small as it is, right? Based on where we're coming from, could it just be a case where we're eventually going to see an initiation to the downside? That's a possibility. If you're looking at this on the daily time frame, yeah, there's nothing like on the day time frame just slowing down again. This could just ease, this minor bullish range could easily hold, and we see a bullish continuation, you know, easy. But you know, if there's a way, like, we can still be bullish taken out at this point. It just follows the same theory, right? When structure gets taken out, we're just following a larger time frame pullback, right? And this is just price coming into further cheap pricing relative to its previous buy pricing or buy regions, right? So the idea is this is a larger range as it is. People would see, obviously, because the idea is people see range low, so new ranges. When this gets taken out, they want to be instantly bearish. But we're trying to justify why we can, you know, we're trying to build a secondary narrative, and I accept the fact that price can head back in its initial direction. So what's the reason? Well, if you go into high time frame, this clearly look like a push, one straight push up from this low to this high, complex pullback before continuation. So let's see if we can get that. Let's see if at first, look, what's really good about that is we've built a bullish narrative, but we've also built a bearish narrative just prior to this, right? Looking as to why price can go down, right? So we know that instantly the idea behind that is if we then do get involved in short positions, we know we want to be at break even at this point. More so at this point, right? Because we know that following this bullish 80, because we have bullish price action all the way throughout, right? So this is the latest range or the most immediate range. If then price can take a fractal structure following bearish flow, we can then see bullishness come into the market, which means we can capitalize on the bearishness, maybe capitalize on the bullishness. If we don't capitalize on the bullishness, we can at least capitalize on the bearishness, manage our positions at the very least, right? So then obviously in terms of entries and stuff, that's when it gets a bit, again, usually entries aren't tricky based on the fact that the idea is set out, all we're waiting for, the idea and the direction is set out, all we're waiting for is session to open. Now let's look at what's happening here, right? So just to break it down, so we've seen high points of the week, previous high points of the week. Today has come, I'm saying today, but yesterday came, sorry, took out the high point. Does that suggest that we've maybe printed in high points of the week, printing down established high points, and now the idea is just continuously looking for this bearish continuation right now? Again, continuations come in a few forms. We can pause, continue, or we can see a pullback, continue. That's what we prefer. Pause mark is something we prefer maybe on the weekly time frame, maybe on the daily time frame, never on the 1 hour, never on the 50-minute time frame. The lower time frame, it gets very, you know, with the lower time frame, you're going to need a stop loss as close to these highs as possible, because price can either just continue to drop now, or it can give you deeper, and then drop. The sacrifice you're making is a worse entry, maybe a worse stop loss placement. So the idea would be, if session was to open, we've got a session opening in the next 50-minute candle, we'll never take this entry. Why? Because this is not an invalidation point. If price takes this point out and then drops, we're still good to look for that, right? So idea would be minimum 30 pip stop loss. Now you have to ask yourself, are you okay with taking an entry here with your stop loss lingering, you know, kind of in the middle of nowhere? Is it worth taking this trade just yet? I wouldn't say so. So what I would say is, actually, again, this is, and I repeat this on a daily basis, the only time I'd ever look for a higher entry or a lower entry when it comes to a sell position is when my stop loss placement isn't favored, right? Now there's a chance that this can get stuck, and again, why do I go for 15 or 30 stop loss? So the idea is, if price has already printed its direction for the day, if price has already given us a pullback, and session open is supposed to be the time in the next 90-minute windows, is a time where price is supposed to set up or at least make its way in its intended direction, which we assume to be bearish. And what's the likelihood of price already pushing up 30 pips, pushing up another 30 pips, and then completing the day bearish? I don't know, you know, that's not something that, you know, you tend to see, right? So we're going with an optimized stop loss of 30 pips. Again, this could be, for me, 15 to 30 pips is like the sweet spot, right? 15 pips hasn't been working too good recently, ever since October, I would say, last year, October. But 30 pips has been working wonderfully. Idea being, so now, as I was saying, so do you want to risk not being entered because you want an entry 10 pips higher? Is a question you have to ask yourself. Now I have to ask myself, am I okay with potentially missing out on this entry So I'm like, okay, that's the sacrifice I'm making, where I need the best stop loss as possible, because again, it could be a case of price just comes and then drops, and I don't want it to be a case of price just nicks my stop loss and then continues down, whereby the validation point or invalidation point for this trade to be invalid is actually this high. Now, this, in some occasions I can take a trade without my stop loss being there. In some occasions where I'm seeing, you know, but stop loss in the middle of nowhere, so I'd rather, like, in terms of comfortability, today I want to take the entry a little higher, and that's exactly what I'm going to do, right? So my entry is going to be there. And now, by no means my stop loss any high, like closer, but it's a tiny bit close. Sorry, at the highs, but it's closer to the highs. It adds a 10 pip buffer to my original potential initial stop loss placement. And yeah, and obviously if price misses me, then obviously there's nothing I can do about it. Going for a 1 to 2, so it's not the greatest risk to reward, but it's something, right? But at least we're playing at very high value regions. We're seeing intent, and so if you look at this on the dollar, right? What do we see on the dollar? So I'm just gonna I'm just getting confused. 1 second. So Monday printed a low, right? And I think this, again, I don't use a dollar religiously, but it's just something I might just check up on every now and then. So the Monday printed a low point. We've seen intention. Now we're expecting this market to be bearish because the overall momentum was bearish. So when we've taken out fractal structure, the first thing we're trying to do is justify why price can remain and continue to trade in its intended direction back to the downside, just like we see on every single occasion. Now, if that then fails, we see price hold this region, and if that fails, we can say, okay, could it be a case price is reacting out these highs before continuing down? Usually we're just looking for a complex pullback to take place, buyers be rewarded, this high gets taken out, and then from here we can reevaluate, look to short this market once again. Perfect, right? Now, what do we see? Price reacts, and then obviously we're messing around, right? So price is giving us bearish ranges, all within a larger range. It's very confusing, and it's reasons why when you're trading a high value region on a high time frame, market slows down, and the lower time frame can be very choppy, and the day time frame might be very clear, right? So what happens? Yesterday we take out these lows, but this low on the euro, what did it take out? It took out Monday's low, but Monday's low on the dollar is intact. So we have to ask ourselves a question: euro is now falling. Is it falling because the euro is weaker? Usually people be like, okay, the euro is weaker, but could it then be a case where the dollar is maybe just a little stronger than the euro, and the euro is more so towards the balance or neutral side? If that's then the case, are we looking for the dollar to rise? Right? Because of clear evident, you know, we've seen lows being printed, lows being protected, whilst taking a fractal structure, whilst giving us bearish flow, whilst seeing sellers come in, sellers being wiped out, We have highs there, simple highs there, following bullish intention, look for continuation. It makes all, you know, it makes sense for why price should, you know, why price could, take out, continue to drop in euro, That's going to be my entry. That's the entry, and obviously just to show you guys what I'm looking at on the weekly, what I've marked out. So on the week time frame, we got this micro range. Again, this micro range can easily be taken out. Why? If that gets taken out, we've still got this larger range. This larger range can be in play, and then we start continuation. But before we try taking out that zone, we try trading that zone with intent. Tested it once, price to come into, giving us better, deeper price. Well, it's not giving us deeper pricing. We're going with the idea that we may respect that region, and if we do respect that region, we can assume that there's a strong amount of sellers resting within this region. We've seen a strong intention, strong intent, strong sellers resting within this market. We've seen constant reaction. So if this market can drop to the downside, we should be in for a good run, 100%. We do have news event. Hoping that the news event spikes up before continuing down. I'm just going to open my MT4. Get that ready. Stop loss would be a minimum 1 to 2. If then price decides to just drop down, then perfect. You know, if this is the time where price expands to the downside, we could make 3-4%. You know, by let's see if we can get tagged into this trade.
So we've been tagged in. And let's see if we get followed through to the downside.